Welcome back. I'm Pratap here. Today is the 19th September 2024. In this video, let us evaluate the performance of the high liquidity zones identified by our NeoStock software. So before we look into the high liquidity zones, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab post, or sometimes you might be seeing the tab community. Whichever the tab you see, click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to training videos. You just click on the link. I'm clicking on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. So you need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at the Telegram channel. Now let's get into the analysis discussion. So in our previous report, NeoStock software report, we have identified 8 high liquidity zones. And we got a very good number of trades today. So let's focus on that. First one is Aubrey reality. It is a daily high liquidity supply zone. So this is a rally candle at the hidden body. It is a rally candle, then one base candle, then a drop candle. This is what our software identified. This 75-minute zone fine-tuned with 75 minutes time frame. So here we have a 75-minute zone. Rally, base, drop, and actually it has a fine-tuned 5-minute zone. But already it gave a very good trade. But why I did not showing this fine-tuned zone? They were already violated. The reason why I am keeping this 75-minute zone, I want to teach you some important lesson in this particular concept. Because sometimes we make mistakes. That's why I don't want you people make those mistakes. So please concentrate. We have a 75-minute zone, rally, base, drop. So now this 75-minute zone is pierced in this candle. This is a rally candle. At the hidden body, it is a rally candle. It is pierced in this zone. And here there is a 5-minute zone is there. From there it picked up the orders and came down. Why I am keeping 5-minute zone? Just to check whether it supports multiple trades. If multiple trades are supported, after 2 or 3 trades, we can focus more on this. Because previously also I explained in lesson 21 aggressive trade setup. One concept is if more rejections from the same zone again and again, probably that zone is having a strong order flow. We can accept further trades in the coming days. But one rejection from the zone doesn't indicate you need to take the second trade. No, that's not. Many times the zones will be violated because it is a tested zone. But today this zone is violated, so it is a confirmation that it is not a zone having a strong order flow. It gave one test and after that it is violated. That's it. For that I kept this. Otherwise we can delete this. I'm deleting. Okay, this is the 75-minute zone, right? This 75-minute zone is having a 15-minute zone. So rally, base, drop. Again this 15-minute zone is having a fine-tuned 5-minute zone. Drop, base, drop. So can we consider this as a fine-tuned 5-minute zone? See, today it touched this zone and picked up the orders and then came down. After that the zone is violated. Already it gave a very good profit. So can we say this is an excellent fine-tuned 5-minute zone from this daily time frame? Definitely you cannot treat this trade as a fine-tuned zone. The reason is the 75-minute zone is already pierced. See here. Once a zone is pierced, it is an invalid zone. Maybe a new 75-minute zone is created here, you can plan. Can we consider rally-based drop? No, this is not a base candle. This is a rally candle at the hidden body. This is a ERC candle. ERC related to rally. This is another ERC related to drop. In between, no base candles. So it is not a 75-minute zone. And this 75-minute zone is violated. I have seen some people made mistakes earlier. Now people who are learning these concepts newly might be making these kind of mistakes. That's why again I am explaining. This is not a fine-tuned 5-minute zone. Then how this trade worked very well. For that, you need to revise the other concepts you learned in lesson 21. Last 2 days we've been discussing those concepts. Last 2 days we are getting those trades only. Aggressive trades. Today the trade you got is an aggressive trade. What kind of aggressive trade we will discuss. So actually we have to delete this zone because I want to teach you this lesson, the mistakes you are making. Once a zone is pierced, you can delete. But why I keep sometimes after zone is pierced is pierced zone sometimes will be helping you finding lower time frame zones that will be acting as a bull or bear traps, or that will be acting as a high liquidity zones. Sometimes they will help pierced zones. Pierced zones are not for taking the trades. Pierced zones are not used, should not be used for fine tuning the zone. So this is an invalid zone for fine tuning. So this is not a fine tuned 15-minute zone. This is not a fine tuned 5-minute zone for this entire 75-minute zone. This is a fine tuned 5-minute zone for 15-minute zone, not for the entire this daily high liquidity zone. So because this zone is pierced, I am deleting this because it is invalid. Now you see, this is a 15 minutes zone. I am moving to the 15 minutes time frame. This 15-minute zone is not inside the 75-minute zone. Then why we are drawing this? Many times this zone will be violated because the prices are, before entering into this 15-minute zone, we are seeing prices are reversing. That means there are rejections near the zone. Because there are rejections near the zone, even here, second time, before entering, probably in this area, strong order flow might be there. Sometimes these rejections could be because of lower time frame zones. Maybe you may find some 5-minute zone or 1-minute zone that might be pushing the prices. That could be the reason. Okay, even though it is there could be some 1-minute zone, this is a price is near to the zone. But sometimes you may not be convincing. You may argue it's not very near. Maybe as per your understanding point of view, you may not consider this much. At least some more. At least let me draw a horizontal line to bring a clarity. Maybe somewhere here. At least prices reach this much level, you may consider rejections is a valid rejection. Definitely you can consider this 5-minute zone for planning aggressive trade. Some people may accept this is good enough to consider the rejections are near to the zone. Some people may not accept, they keep their level like this. Some people may keep their level like this, very near to the zone. That's why different people are having different understanding. I do agree, this may not be, maybe this is giving a clue, but this clue is not really a strong clue to consider this is an aggressive area. So you need to wait for one more clue, some more near, coming close near and then rejection. That clue you got in today's trading session. But before that, let me go to the 5-minute zone. This 15-minute zone is having a fine-tuned 5-minute zone inside the 15. So here this earlier price action clue rejections before the zone is not really convincing. It is not, maybe some excuse me, this is at the border. Sometimes you may not really consider it is very close, or to consider this as a rejection. You want one more price action clue to confirm. Really, this zone is having a strong order flow. That is what happened in today's trading session. See, today morning, 9:15 candle, prices came very near to the zone, and then see the rejection, prices moved, and once again they started moving up. Now prices entered, really reached into this zone, and you got the trade, and after that prices strongly going down, and finally reached our 15 minutes target. Why we exited a little before reaching 15 minutes? Because earlier price action clue, prices did not allow. Maybe there could be some entry buffer here for this particular zone. In such kind of situation, better is only just 2 rupees difference before the zone, because it is a nearly 1800 rupees worth stock. Exiting 2 rupees before, it doesn't make really anything for our profitability. But the thing is, these buffers may not let the prices to enter into the zone. Rejections are always clues, price action clues. So that's why I have drawn the horizontal line by seeing this rejection before this 15 minutes target. Exactly, my common sense worked. Just before reaching this blue color line, again started moving up. So probably here strong order flow, some entry buffer, dynamic entry buffer concept I explained to you. Such kind of concept institutions might have applied for this 15 minutes target zone. Anyway, it's almost near to the 15. You would have exited with this entry buffer, and you got a very good profit. The reason is because of this price action clue before we got the trade. If this price action clue was not there, maybe you might be having a dilemma whether to accept this trade or maybe to reject. If you would not have taken a trade, see how much profit you would have missed today. It has given extraordinary profit. Why extraordinary profit? I will show you. But here, before that, some people will having a question in their mind. Maybe this is a morning 9:15 candle. There could be some freak trades at 9:15. Because of that, maybe just 1 or 2 orders, that is pushing the prices down. Maybe some freak orders are executed. That's why it is looking like there is a huge rejection. Actual price is here only. Freak orders, what will happen? With a gap, it will push. Just 1 or 2 trades will execute, and again they come back. That is not really a strong order flow. Just 1 or 2 orders, that is actually creating some kind of wrong impression with us. Excuse me. So to confirm, actually you should understand it is not a 9:15 candle. It is a 9:15 5 minutes candle. So go to the 1 minute, you get clarity. If you really go to the 1 minute, see, this is a 9:15 candle. So there is no freak trade. Prices were moving entire 1 minute duration. This is the next candle, 9:16 candle. Freak trades happen during the first few seconds of the market trading time. Just the first few seconds, maybe 1 second or 2 seconds, maximum 5 seconds. Even 5 seconds is a big time for the computers. Maybe morning 9:15, 01 second itself, those freak trades will take place. After that, the order flows work properly only. See, this is the entire 9:15. So prices were moving up the whole 1 minute. After that, further moved up. And here some orders are executed, and then prices again push it down. They opened with a gap at 9:16, and then the order flow is very strong. Again it pushed. Continuously prices were coming down. This has given a confirmation that in this area there is a very strong order flow. After that, the prices entered to the fine-tuned 5-minute zone inside the 15-minute zone. 15 minutes is an aggressive trade. Because the 15-minute zone is not, this is the 15-minute zone, this is not part of the 75-minute zone. Earlier we deleted 75-minute zone, the reason that was already pierced. So that's why you should consider this trade as aggressive trade, not the fine-tuned trade. This is an aggressive trade setup. A successful aggressive. Inside the 15 minutes aggressive zone, we have a fine-tuned 5-minute zone. There we took the trade. Why we looked for fine-tuned 5-minute zone? To minimize the risk. Very simple. And finally it reached the target. And when we got the entry? At 9 o'clock 30 minutes. And when it reached the target? Maybe at 11 o'clock 45 minutes. So this is at 9:30. 9:30 we got the entry. 10:30, 11:30, 2 hour 15 minutes time it took to complete the trade. Okay, within this 2 hours 15 minutes, how much profit it has given? Let me open the Excel sheet. Oberoi Realty has given 36,085 rupees as per one futures lot. Based on one futures margin cost, the ROI is 13.5%. One future margin cost, 13.5% ROI it has given from here to here. So within 2 hour 15 minutes time, we captured 13.5% return on our investment. Our investment is one futures margin cost. So excellent trade and aggressive trade. See, last 2 days we are getting continuously aggressive trades. See, previously also we got aggressive trade. And today we got a good number of aggressive trades. Not only this, other stocks also you got aggressive trades. And also we got one bull trap trade also we got today. Okay, after that again, this is almost closing hour of the market at 3 o'clock 10 minutes. This again reached and this is violated. Only one test it supported, and this is closing hours of the market. Anyway, we don't take any trades in the last 30 minutes or 45 minutes time period. And above that there is one more zone. That is also an aggressive trade setup. So let me show you why I have drawn one more zone here. What is the reason? See, this is the drop ERC candle looking like a drop. By seeing green, don't say it is rally. Prices were, it is a failed ERC candle. The failed ERC candle can be considered as a leg-in. So it's a leg-in base drop. We can consider this is like a drop in the dynamic view. In the dynamic view, it is a drop candle, base candle, drop candle. See, this zone again, prices reached again one more time rally based drop is created within the same area. Many times high liquidity zones we will be seeing such kind of scenarios. Once again prices entered here and came down. Once again prices entered here, came down. Probably this zone is working like a high liquidity zone. 5 minutes high liquidity zone, it could be. So that is the reason why if it high liquidity zones, until it is violated, we can plan multiple trades. So this is one of the reasons why I have drawn this zone. High liquidity zone can be used in the aggressive trade setup. High liquidity zones can be a fine-tuned zone or high liquidity zone within high liquidity zone, high priority high liquidity zone. I mean higher time frame high liquidity zone. This is a 5 minutes high liquidity zone. But this is there inside the daily high liquidity zone. A lower time frame high liquidity zone inside higher time frame high liquidity zone without fine tuning is an aggressive trade. I already explained in lesson 21. In one of the lessons, aggressive trade session, I have explained multiple scenarios how you can use aggressive. And almost closing hours they came very near, but after that market is closed. Anyway, if earlier if the prices would have reached this zone, we would have planned another trade. So that's why we have drawn this. I have drawn this zone. And the next one is Bajaj Finserv. This is a 75-minute zone. So this is a 75 minutes supply zone. When this zone was created in the year 2021, this zone was created in the year 2021. Rally, 2 base candles and a drop candle. This is what our software identified. But the problem with this zone is we can't fine tune this zone, because in 2021, the 5 minutes data is not available. So that is the reason why we can't find a fine-tuned 5 minute zone. But in the recent price action, new zones are created. Prices reached almost close to the digital line. Once again, institutions created new zones inside this high liquidity zone, this 75 minutes high liquidity zone. That's why in the recent price action, we have identified some of the fine-tuned zones. So here we got a 15 minute zone. So let me show you a 15 minute zone. Rally, base, drop. But before creation of these 15 minute zones, let me go to the 75 minutes time frame and let me tell you. See here, forget about these candles. Prices came and from here again it started moving down. What could be the reason? Okay, a new zone is created, that could be one reason. But before that, is there any lower time frame zones are there that is having a strong order flow and pushed the prices down? That way also you need to look into this in our analysis. You need to think in our analysis. See, prices came and the rejection. Is there any lower time frame zones? Which is the reason for this push? For that, go to the 5 minutes time frame. In the 5 minutes time frame, there is a drop, base, a drop. Okay, because of trade point of view, type 2 I have planned, but you draw the zone up to type 1. You get even more clarity. See here, prices came very near to the zone, very, very near. See, the gap is very, very small. So that means this 5 minute zone is having a very strong order flow. And that strong order flow pushed the prices. How they pushed in such a way, it created a new 15 minute zone. So next time if this 15 minute zone is violated, at the time you can plan a trade in this zone as an aggressive trade setup. Because what is the aggressive, what is the price action clue? Rejection before this zone. See, before the zone, prices reached very close to this zone and again prices pushed down. And this price rejection is a clue to consider this is an aggressive trade. And to minimize the risk, what I did, type 2 proximal, we planned the trade. So that risk is minimized and we will also get the reward because of all these reasons. And today price entered into this area and we got a trade. But even before that, how I fine-tuned this 5 minute zone, 15 minute zone inside this 15 minute zone. Let me go to the 15 minutes time frame. Here you have a 15 minute zone. We have a rally, base, drop. And this base candle is a rejection from this 5 minute zone. Before the 5 minute zone. It is a price action clue for this zone. That is what, based on that we planned a trade here. But before that, how I fine-tuned this 15 minute zone. Is there any fine-tuned 5 minute zone? Yes. Go to the 5 minutes time frame. See here we have a rally, base, drop. Rally, base, drop. This is a fine-tuned 5 minute zone. And this zone is already tested zone. See here, prices after that again picked up the orders. Okay, can we take more deep inside? Can I fine-tune to the type 2 proximal? That way you can plan a trade. Even type 3 proximal also, it picked up the orders in this candle. So because it is already a tested zone, there is no meaning any planning any trade from this. See, today it is a reject. The zone is violated. This fine-tuned 5 minute zone. So it's invalid for the trading point of view because it is already tested. Already, that means already picked up the orders from the zone. Even type 3 proximal also it picked up the orders in this candle. So I am deleting this zone. The zone is no more valid. But this zone, this price action helped us. How it helped us? To identify this 5-minute zone is a zone having a strong order flow. That way we can plan an aggressive trade based on the price action rejection before this zone. If you drop up to type 1 proximal, you get drop base drop, you get better clarity. Prices are very near to the zone. Risk management point of view, we planned a type 2 proximal trade and we got the entry, and after that it reached the 15 minutes target. What is the 15 minutes target? Here you have ERC candle, like a drop candle. This is a leg-in and then base and then a rally candle, and this is the target. So we got the entry in this candle. So at what time we got the entry? Today at 9:15 candle we got the entry. And when it reached the target, 10 o'clock 5 minutes candle, it reached the target. But this trade, I don't know how many of you really got this trade. The reason is, this is at morning exactly 9:15, 1 minute candle. Now we are in the 1 minute time frame. See, this is morning 1 minute candle. Prices are opened here. They were started moving up. At some point of time, prices went inside the zone, and then from here the rejection. I know, because previously also we discussed, some people, they don't plan trades in morning 9:15 candle. They don't plan. Those people will miss this trade. Some people may plan the trade. They may keep pre-orders in this particular zone. They might have kept before the market starts. They might have kept pre-order. That is possible in cash segment, not in F&O. So such kind of people, their orders might have been executed here. And it could have been a successful trade for them. Whether you take the trade or you did not take the trade, that is a different story. But our high liquidity zones has given an opportunity, and that was worked out. Remember, previously also we have seen one stopped out trade in exactly morning 9:15. Still we considered, because if anybody kept pre-orders before market starts, their trade would have been stopped out. That's why earlier we considered. But many people who don't trade in 9:15 candle, that day it was a lucky day for them, because they didn't take a trade and nothing is stopped out. Exactly the same way, today it is not a lucky day for the people who did not take at morning 9:15 candle. Otherwise they might have missed such a great trade, given a very good ROI today. This trade, how much profit it has given? Bajaj Finserv has given 12,500 rupees profit, which is 7.4% ROI. And the trade also finished quickly. This is morning 9:15, it got the trade and reached the target at 10 o'clock 8 minutes. That means almost in 50 minutes time period the trade is completed. Less than 50 minutes. That means within an hour the trade is completed. Okay, our NeoStock software high liquidity zone worked, but who took the trade or who missed the trade, that is a different story. So this is about Bajaj Financial Services. And the next one is IPCL Lab. IPCL Lab has given multiple trade opportunities. It also has given a bull trap trade also. Bulls are trapped by the institutions. You already learned bull trap concept in lesson 21. So those who identified the bull trap, they would have took the trade, but before that we got a fine-tuned zone trade. We got a clean and neat fine-tuned zone from this 75-minute zone. So this is the 75-minute zone. This is a rally candle. You have 1, 2, 3, 4, 5. Actually, fifth one is the medium size leg candle, part of the base. because of the earlier base candles, and then a drop candle. This is identified by our software, rally base drop. And this 75-minute zone is fine-tuned with 15-minute zone. So in the 15 minutes time frame, we have a rally, we have 1, 2, 3, 4, 5 base candles, and then a drop candle. And this 15-minute zone again fine-tuned with the 5 minutes time frame. In the 5 minutes time frame, this is you consider this as a ERC candle, failed ERC candle as a leg-in. You have 2 base candles and then a drop candle. This is the fine-tuned 5-minute zone. But at the same time, you see, there is a rally base drop. Maybe some people may consider this as a drop also because of almost it's not exactly failed ERC, but almost looking like a failed ERC candle. Some considerable body is there. That way you can also consider this as a rally candle. That also possible. But anyway, whichever the way you consider, whether rally based drop, if it is rally based drop, you will keep your trade up to here. In the dynamic view, if you consider at some point of time, prices reached up to here, green candle. After that, prices were pushed down, then it is becoming a drop candle. If that is the case, a drop based drop, you will draw the zone like this. But whichever the way you draw, the risk management point of view, it might have given a very small risk. See, earlier also from this zone, exactly at the starting of the type 1 proximal entry, just kissed that type 1 proximal entry, and then sharply prices came down. This itself is an indication this area is having a strong order flow. And also the institutions, they keep a little above the high liquidity zone. This is a bull trap. Why we are saying bull trap? Because if it is stopped out at this zone, if it is stopped out, people will exit from this 75-minute zone or fine-tuned 15-minute zone or fine-tuned 5-minute zone. You will keep your stop orders. Institutions will, because it is stopped out, you will exit. Earlier you would have taken a short trade. Your short trade is stopped out. So you go for long trade. To exit the short trade, you go for the long trade. Longs means bull trades. And all these bull trades are captured by the institutions with their short orders. Institutions are going for short orders, and all their short trades are captured by the all these long trades are captured by the institutions with their short trades. Because bull trades are captured by the institutions. That means bulls are trapped. That is what I explained when I explained about bull and bear traps in lesson 21. See, today it picked up the orders from the bull trap and further came down. But before that, we got a successful trade from this fine-tuned 5-minute zone. See here, exactly in this candle, 9:30 candle, prices reached. Even in this candle also, it almost reached. Here it is even a very clean. Prices entered a little inside this. And then stopped going, and then it reached the target. It has given 3.18%. That means 1:3 RR we have this trade. And bull trap, even more RR we get. So we got 2 successful trades. One is a fine-tuned. After that fine-tuned zone is violated, and then prices, all the bulls are captured here. Because they're, in case if anybody has taken a trade, their trades are stopped out, and all these stopped out trades are captured by the institutions. That's why bulls are trapped. From this bull trap, see how it pushed the prices. And when we got this trade at morning 9:30 candle, and then when it reached morning 9:50. So that means within 20 minutes, the first trade is completed. What about the next one? This is also 10 o'clock 35 minutes we got, and 10 o'clock 45 minutes candle it reached. So that means within 10 minutes, the trade is completed. 10 to 15 minutes, the trades are completed. How much profit they have given? The first IPCL lab trade has given 9,360 rupees profit. which is 5.5% ROI. And the second trade, the bull trap trade has given 13,160 rupees profit, which is 7.8% ROI we got. From both these trades, we got a very successful profits, excellent profits. 5.5 is very close to our average intraday ROI, 6%. And this is beyond our average intraday ROI, 6%, 7.8. So HPCL Labs has given 2 successful trades. And the next one is Bank of Baroda. Bank of Baroda has given 1 successful trade and also 1 trade is stopped out. Both we have seen, but Bank of Baroda is a daily high liquidity demand zone. This is a rally base rally. Previously we discussed this. Maybe I didn't remember yesterday or day before yesterday in one of the videos I have clearly explained. Especially I mentioned about this particular zone. This is an aggressive trade setup. Already it is tested. Still why I suggested you to go for the trade in this zone is because of the earlier rejections before the zone. Almost very close to the zone. See the rejection. Again another rejection before the zone. Again another rejection before the zone. Of course, at the time a new zone is created here. Because of the new zone it picked up the orders and moved up. There could be the reasons, but definitely this is a valid zone even though it is tested because of the rejections before the zone. After this test, the rejections before the zone is a price action clue indicating institutions added a lot of order flow again in this area. A new order flow they added. Earlier it was tested, it went deep inside. Even then we want to plan a trade here. That is what I explained maybe in your yesterday's analysis video or day before yesterday analysis video. I didn't remember, but one of the videos I have explained. So please look into the earlier Bank of Baroda analysis. But there I made one mistake. Today only I detected that, but let me tell you. So this daily zone we fine tuned with 75 minutes time frame earlier. Here we have a drop base rally, this 75 minutes. You can also consider even this drop base rally also. Either one you can consider LOTL concepts. This is drop base rally. This is within the area because the first one is the bigger one. This we have considered. And that we again fine tuned with 15 minutes time frame. Here we have a 15 minutes time frame. Drop base rally, the 15 minutes area. And this is having a fine tuned 5 minute zone. Let me go to the 5 minutes time frame. So here we have a drop, 3 base candles and a rally candle with pro gap. See, from this pro gap area it picked up the orders and moved up. So definitely that is indicating a strong order flow, but unfortunately institutions might have cancelled their orders. Maybe that's why easily it is violated today. It didn't give any resistance from this zone. Easily violated. But what I did earlier, the half of this, here I have drawn some zone. Maybe it was a mistake, I think. I have seen a zone like this. I don't know why I have drawn. There is no reason behind drawing a zone here. The reason is this is a drop candle. This is a medium size. Again another medium size candle. So definitely we can't plan a trade here. But I don't know why I have drawn. I didn't remember. Maybe it was a mistake. I thought it is a 1 minute zone. I looked into the 1 minute. 1 minute also it is not convenient zone here. Maybe some mistake I have drawn. That is what I am thinking. So that's why I corrected it. This is the valid zone here. And this is the zone we can plan a trade. But unfortunately, this one is easily violated. See here? Easily violated. It didn't give any push. Easily violated. So it stopped out. At what time? At 11 o'clock 25 minutes. You might have taken a trade in this zone because at the time it reached. and in this candle it is completely violated. You might have exited. But after that, you see here, the price has reached this aggressive trade setup, the 5-minute zone. This is an aggressive trade. It is not a fine-tuned zone. Already I have shown you this. So this is the one we have drawn earlier. Rally, 2 base candles rally. This is the 5-minute zone. Why I have drawn this zone? There are 2 reasons. Reason number 1, earlier already it picked up the orders from this zone. Twice it picked up the orders. This is the first time. Because we had the entry buffer, right? Within the entry buffer area, you got the trade and then moved up. And this is the second time. It went more deep. After that, there are many times before the zone, there were rejections. This is the rejection before the zone. So we would have got a trade also here by adding some entry buffer. You may think like that, right? No, actually entry buffer is a little below. The 0.1% entry buffer is a little before. Today's trade we got with 0.1% exactly at 0.1%. We got the trade. 4 paisa before itself, entering inside, 4 paisa entering inside, we got the trade. So that means we got the exact entry buffer area, we got trade today. But this you can't take a trade even if you had a little shortage is there here. But it is a rejection, clear rejection before this zone. That means a strong order flow, institutions added before this zone. That is a clear indication. After that again, once again, see before the zone, it is a clear indication there is a rejection. Prices moved away from the zone within this area. And again, once again, here also. But it is a little higher, but okay. We can consider all these are all effect before there is a strong order flow in this area. And today you see what happened? Prices reached exactly our entry buffer area. Some 4 paisa inside they went. Around 4 paisa inside it went. We got a clear trade. At which candle we got? 11 o'clock 40 minutes candle. It entered into the zone and reached this 15 minutes target. This is the 15 minutes target. We have a drop, base, drop. That way you can consider. And reached the target. So how much profit it has given? Before that, this is a stopped out. How much loss we got? Both we will look into that. Bank of Baroda, first you got the loss, 1,316 rupees, which is minus 0%, 0.7% ROI as per one futures margin cost. The successful trade has given 12,870 rupees. Here we got the trade in this candle. We got the trade. Just before the entry buffer, we got the trade. And after that, it reached the 15 minutes target. That way, it has given 6.7% ROI as per one futures margin cost. The second trade in Bank of Baroda. First one is stopped out and second one is failed. So we discussed IPCL Lab, Bajaj Finserv, Oberoi Realty, Bank of Baroda, both the trades we discussed. And then ABB is also one trade executed, but it is stopped out. Let me go to the ABB. ABB is a 75 minutes high liquidity zone. It is a demand zone. We have a drop, 3 base candles and a rally candle. Drop, base, rally. And we have a fine-tuned 5-minute zone and it is stopped out easily today. 15-minute zone. We fine-tuned 15. We have a ERC candle, rally candle, because prices were moving up. You have to look into the dynamic view. It looks like you, by seeing the color you say drop. No, it is a body is a very small, but wick is very high. and wick is moving towards up. That kind of view you have to build to draw perfect zones. So for me it is a rally, 2 base candles and a rally. This is the 15-minute zone. Again this 15-minute zone fine tuned with 5-minute zone. See, the biggest problem because of these gaps, sometimes candles look small. The moment you hide the gap, you will get clarity about the candle. See here, it's a rally, 2 base candles and rally. Actually, if you draw, risk point, trade management point of view, we planned a type 2 proximal, but your zone would have been like this. Your zone would have been like this. See here, again here it picked up the orders from this zone. This entire movement is because of the order flow just before. See the rejection before the zone. So in this area strong. You may say we can also draw drop base rally, one more zone. If you draw a zone, one more zone like this. This is the LOTL concept. You need to combine both the zones. Combining both the zones is a risk management. That's why what I did, you need to think in a clever way. Actually, from where the orders are getting picked up? From this zone. Just before the zone. That means before this zone, there is a strong order flow. That's why you need to wait until prices are entering into this. To minimize the risk, what we did, we went looked for type 2 proximal trade. So that risk management is very easy. See, these are all like the prices were pushing up from this area. Because definitely there could be a strong order flow. This is a very good fine-tuned area to plan a trade. But unfortunately, today what happened? The zone is violated easily, very easily. It didn't give any resist. It did not resist the prices. I mean, resist means, general resistance means it is pushing. Here, it did not hold the prices. That is the right word. Easily zone is violated. So that way ABB is stopped out, and ABB has given 869 rupees loss on this particular fine-tuned zone, which is minus 0.4% negative ROA it has given. 0.4% negative ROA. Okay, this is about ABB. And there is one more stock stopped out, looks like stopped out, but actually they are not stopped out. We clearly know that the zone will be violated because you already learned in lesson 16 when a zone will be violated, that is BPCL. This is also 75 minutes high liquidity demand zone. We know that this zone will be violated. Why we know? There are several reasons. First of all, this is a rally candle, hidden body. This is a rally. 1, 2, 3, 4 base candles, and then again a rally candle with hidden body. See, the first, by looking into the zone, I got a very bad impression about this zone. Why? Rally, base, rally. See, all these candles are moving up, up, up. Do you remember your first lesson in your training course, lesson 1.1? I explained about demand and supply. I explained the rules, demand rules, supply rules. The third rule, do you remember? Prices will be moving in a narrow range when there is a equal demand and supply. From that, then lesson 2 I explained. From that narrow range, you will be seeing an explosive candle. That is indication institutional participation. That way, you identify very strong demand and supply zones. Okay, here a strong explosive candle is there, good. So institution, it is confirming. But earlier narrow range, see all these are all not narrow range, they are moving, they are base candles, I agree. But all these base candles they are moving up, moving up, moving up. That way they formed the zone. And such kind of zones, I am not saying always, many times such kind of zones will be violated easily. That's why by seeing the price action, I got the first impression, this is not a good zone. That is the point get into my mind the moment I draw this zone. Okay, fine. Anyway, that is fine, but sometimes there could be some hidden order flows might be there. So that's why I fine-tuned with 15 minutes time frame. So in the 15 minutes time frame, I identified two 15 minutes order flows. But again, here you see all these are all looking like base candles, right? No, actually this is a rally candle, but looking like a base candle, you may argue, because of these gaps. This is the problem with the TradingView software. Maybe it may not be TradingView software because of the scale adjustment. In the programming scale adjustment, that is making the earlier candles very small. Only one candle with a huge gap, it is opened, that made all the earlier candles small. Even here also there is one more gap. Both these gaps together, it completely compressed this area. So that's why I hide these gaps. Then you get clarity. Now you analyze, you will get clarity. See here? Now clearly drop. Two base candles, they moved in a narrow range. Now a rally candle, that way you can consider. Sometimes you may not agree. This is not a very big candle. Yes, I do agree. The reason why I consider this as a rally candle, because from the narrow range, the movement has started and then follow through is also happened. There is no doubt this is a very big candle. See, from here to here the candle is there. How big it is. This is moved in a narrow range, drop, base, rally, and after that the next follow through candle entered into this area. It completely consumed this 5 minute zone area. Let me go to 5 minutes. Sorry, I am explaining in 15 minutes time frame, rally, base, rally. If you go to the 5 minutes time frame, you get better clarity about these candles. These are the 15 minutes rally, two base candles and a rally candle. Here drop, two base candles and a rally candle. This is 15 minutes. But 5 minutes we will be having more clarity in the picture. So go to the 5 minutes time frame. So here you have these candles. So now you see, you will get clarity. This is the 15 minutes area. So here you have rally candle. This is a medium size candle, rally, and three base candles, and then a rally candle. Definitely agree this is a big candle, large candle. After that, prices again get into this and see this wick, completely this 5 minute zone, the fine tuned 5 minute zone, it picked up the orders. See, first you look into this candle. This is how zone was created. This is a rally medium size leg candle, then three base candles. This is the medium size base candle. This is also these are all medium size base candles, and then a large candle. So rally, base, rally. Next candle you see, this is a very big candle. In this candle prices came, opened here, it went down, and completely this 5 minute zone area is violated. That means in this 5 minutes area we can't plan any future trades because it is violated. Pierced, the zone is pierced, and then again started moving up. And you may ask, is it not a base candle? Rally, base, rally. Can't we draw this zone? See here, that is not a base candle. See how big this candle is. This is a failed ERC candle or maybe ERC candle. The length of this candle is almost same as the length of this candle or a little bigger than this leg out candle, this length. See the wick, a big wick is there. Because of this gap, all these candles looking like a small candles. This is problem with the TradingView software. Because of these gaps, it is earlier candles are becoming very small. So that's why when I analyze, I will close the gap and then I look into the charts. This you can't draw a drop base rally because it is a medium size leg candle. Medium size leg candle can't be used as a leg out. So that's why you can't draw this. And that means this zone is useless for us. We can't plan any trade in this. And we know this will be easily violated. And look into this. Again, all these are all medium size candles, base candles. This is a base candle. 1, 2, 3, 4, 5, 6, 7 candles are there. These are the medium size base candles. 1, 2, 3 medium size. And these three are small candles. Tinny candles. These are all tinny candles. And again a medium size candle. So 7 candles can't be part of the zone. Such kind of zones will be violated easily. That's why we can't plan any trade. So we know that this zone will be violated. That is what happened today. See how easily the zone is violated. So easily the zone is violated. And even this is even more easily violated. There is no push from this zone. At least some extent prices pushed up. We can believe some order flow is there. Easily the zone. Even if at all if we see any push, that is a small period within this zone. But we need a push, at least 2-3 candles push should be there towards the upside. Such kind of things we haven't seen here or here. Easily both the zones, and finally entire 75-minute zone is also violated. And how we identified this zone will be violated? Because you already learned in lesson 16 when a zone will be violated. So that's why we saved our trades. Anybody wants to plan a trade in this area, you can't plan because we know that the zone will be violated. At least we stay away from BPCL, from our trades. Okay, IPCA, Bajaj Finance, BPCL, ABB, Oberoi Realty. Next, IndusInd Bank is a 75 minutes high liquidity supply zone. Sorry, this is a daily, I think. Not 75, daily high liquidity supply zone. I already explained how we fine-tuned this zone in earlier. And also we got a trade also from this aggressive trade on this day. I think last Friday. Monday. This is Wednesday. Sorry, this is on Tuesday. Tuesday we got a trade. Tuesday I explained how I fine-tuned this on Tuesday's video. So that's why I'm not explaining. And today we didn't get any trade. Prices came very close, but we can't get any trade here. But there was a very big push from here. And next one is HDFC Life. HDFC Life is also a daily high liquidity demand zone. I already explained how I fine-tuned this zone. I think on this day, I think this is also on Tuesday. I might have explained Tuesday or even yesterday. I didn't remember either. Look into either yesterday or Tuesday's videos. How I fine-tuned this zone, I explained already. But today we didn't get any trade opportunity. Prices didn't get into this. So that's why we didn't plan any trades. So these are the high liquidity zones we identified from our yesterday's. 2 are stopped out. And remaining stocks, we got a very good profits. Okay, let's all meet again in our next video. Hope this information will be useful to you. Thank you.